All right, what is going on, YouTube and Discord family? Welcome back to another edition, my top-down analysis with me, T. Hobbs. Today is 18 May 2025, year of our Lord, and we will be reviewing NASDAQ, S&P, Dow Jones, and the volatility index. I'm going to skip the other two, gold and Bitcoin. I'll make separate videos for those or just put them out to the Discord. That being said, if this is your first time here, please make sure you like, subscribe, all that good stuff for the YouTube algorithm. For the Discord members, thank you for giving me a little bit of your time, and I hope this helps you on the week. So as of last week, you guys know I had a pretty bad week. I'm not gonna say bad week. It was profitable, but in regards to like fighting the trend, I did that a lot, right? But in regards to the top-down analysis, everything basically went exactly to the bullish side. We went exactly where I wanted us to go. I just never got a pullback to, I guess, trade the long side the way that I wanted it to. So in regards to the top-down analysis, everything worked well, though. But moving forward, this week is a new week. You know what I mean? Like we start the same way every single week, and we talk about the things that are happening. So we'll start first and foremost with, of course, the Moody credit rating thing. Like, I'm not going to go through all of the fundamental reasons why. You can check another video for that. But here's what I will say. History tends to repeat itself, but structure trumps everything, right? I'll say that again. History tends to repeat itself, but structure trumps everything. So we're looking at the NASDAQ, right? First and foremost, we'll start on the NASDAQ. I'll break down the monthly, weekly, daily, and the 4-hour. And then we'll talk about some significant happenings, and then we'll move on to each individual instrument. So starting with the NASDAQ, right? I've taken the liberty of going back on the daily time frame, right? And this is all I'll do when talking about Moody's, right? When I'm looking at the daily time frame, right? The last time that we got a credit downgrade, right? Whether it was through Moody or whatever, I really didn't do much research other than look up the last time we got a credit downgrade, right? So we can have something to compare the structure to. It was August 1st, 2023, right? And it's this level right here. We were rallying up aggressively, right? We pushed up, and then the credit downgrade came after Monday night, right? And we got a gap down, and I believe the market sold down eventually, roughly about 10%, I believe, if I do the math. Hang on. We go from here to here. Yeah, the S&P or the NASDAQ sold off about 11% straight to the downside, and then ended up recovering. But the structure is different. We appear to be at our peak, right? And we had already run the highs, right? Now, I believe that the structure here is very, very similar when we go back to this area. This is, again, skipping. I'm not skipping. I'm just kind of focusing on the Moody downgrade. I believe that the structure currently is very, very similar. But what do we have to do? We still have to run these highs up here, right? Before any downside can commence, I think that the market is going to go up and take out this liquidity. And that's why I'm still remaining to be bullish going into next week. I think a lot of people will be looking to short this immediately, right? And maybe they'll be rewarded. I'm not sure. But I think that the market will still look to target this liquidity after running all of these lows, right, down here. I think the market's going to want to run these liquidity highs here before finally coming back down, right, and selling off in the month of May, or, you know, maybe a little bit delayed into June. I still have us going into a sell-off period. I just think that we might want to we'll probably run the all-time highs first, right? But anyway, let's go back to the structure. Going to the monthly time frame on the NASDAQ, right? If we look at the structure, this is the reason why I'm so bullish, because we had one sell candle, and then we commenced to buy the market up. I think in the last 2 months, we're up over 30% on the NASDAQ. That's crazy, right? 30.45%, and the month of May isn't even over yet, right? Before it's all said and done, we're probably in the month back above this level here, and we'll get down to some of my levels as we break down the further time frames. Let's go down to the weekly time frame, and we can just zoom out, which is ironic that this credit downgrade also lines up with the low of the market, right? Which is kind of crazy, right? Like, we ended up tapping into this range, put in the low of the market, and then rally. And once we got above these highs, like I told you guys, if we turn on the weekly 200 EMA, number one, once we got above these highs and once we tapped into the 200 EMA on the weekly, I've said this in numerous videos. This is very rare. So when it happens, the market usually buys it up and buys it up aggressively. And once we tapped into the 200 EMA and then we broke the highs, once we broke this high, this downtrend is over, right? It's OVA, right? There is no more downtrend. We are officially in a very aggressive uptrend, and you can look for the market to keep pushing up and then eventually come back and retest this area right here, right? We gapped above it, essentially creating somewhat of a bullish breaker out of this area, right? So you anticipate the market coming back down and retesting all of this. But in order for this to be 50%, we're probably going to run these highs, right? So everybody that's super bearish on the Moody'S stuff, I mean, it's bearish, but I mean, when you look at it, the market barely sold off. Like it had a very aggressive sweep to the downside, but that was expected. In any structure, that sweep would have come. But what did it do on the higher time frames? It literally did absolutely nothing but make us have a doji candle on the daily. Speaking of the daily time frame, again, if we analyze the previous week, you can see that we successfully got above the 200 EMA, right? We're holding, I mean, we didn't even need to hold support. We gapped above it and we closed, or we opened this candle with no wick, right? That was on Monday. On Tuesday, we tapped back into that structure, barely 50%, not even 50%, pushed up higher, and now we're just kind of running out of steam here a little bit. So maybe we get a nice pullback to start the week and then push up higher. But honestly, looking at the way that the crypto industry is performing right now after hours, it usually, again, like I said last week, it usually gives us a sign for what the market is going to do. So if this behavior continues, we might just gap up, right? And do the exact same thing we did last week, getting everybody super bearish with the Moody news, right? Of potentially changing the sentiment and then just pushing up above and trapping more bears as they continue to push. In my opinion, until the market gets back below 19,696, right, on the NASDAQ, it's only up, right? And I'm not saying you can't short down to this level. I'm just saying from a structural standpoint, this is the last low on the daily time frame where the market put in. So that means until we establish a new high and a higher low, this is the swing point of the market, right? So until the market's below this level, everything's going to be to the upside, right? Let's break down the 4 hour and I'll bring out my levels for the top down analysis. I'll kind of give you my predictions on the week and then we'll move on to the next instrument. On the top down analysis, what we're looking at is we have a chessboard high and a chessboard low, aka PM session high, PM session low. We have our weekly fib at 20,945. And of course, we have that massive in-wall back from May 11th, which was the start of last week, to 1.24% or 252 point in-wall. So as long as we're above this, the market is going to continue to buy up, right? So to the downside, if I'm looking for the market to go down, I want to see the market travel up first. Well, the only thing that's above us, right, is the chessboard high. So as long as we stay up, if we sweep up, you know, I'm like push up above this previous day high a little bit and then immediately fail, then I'm looking for downside, pushing back toward the weekly fib, the in-wall, and then finally tapping in 20,153 for roughly about 6.25% back to the downside of 20,153. The second level that we could go, if we just get, if this Moody thing tends to be a little bit more bearish and I'm incorrect on my thesis, then we would gap down, right? And if you look at the SPY, right, or you look at the Qs actually cleared these lows in the after hours, right? What you'll see on the S&P, on the futures is that the futures market closed at 1800, right? But the aftermarket trading continued. And in the aftermarket trading, the Qs and the S&P, they actually traded below this low, below Thursday's low, right? So if that's going to hold true, if buyers don't buy that up in the pre-session, then we should get a gap below 21,189. And if that happens, then I'm anticipating a move back down for sure below the previous day low. So we gap down, we go back up, fill the gap, hold previous day low, and then we travel down to 19,988 for 6.25% retracement. And again, I'm saying retracement, but it should be a nice strong move to the downside in order to close some of these gaps so we can start to trade higher, or we actually start a reversal below that 19,696 level. To the upside, what am I looking for out of the NASDAQ? If I want to see the NASDAQ go up, I still want to see it trade down first. Well, what's the nearest level? Well, we have a couple levels. The first level is weekly fib. Notice how we have this huge gap. This is the high and low that brought these new highs. It would make sense for the market to trade down into 20,989 or 20,94575, pushing us back into the weekly fib, continuing this uptrend, right? But giving us a nice healthy pullback to trade higher. If that happens, I'm looking for the market to push back to the upside 6.36% into 22,279. And then the second way the price can get delivered until Monday or Tuesday kind of clarifies it for me, I'd be looking for a previous day low tap, right, of 21,319, pushing back up to 6.23% up to 22,729.25. And I believe, if I'm not mistaken, that these are all-time high levels. So if the bullish prediction is going to play out, I would anticipate the monthly candle, yes, this week, pushing us above all-time highs, or because we don't have a lot of catalysts besides the Moody thing, we could just consolidate in this range, right? Going back and forth until the end of the month or the beginning of the month, where we have enough catalysts to officially push us above those all-time highs. So just be aware that we have done a lot of movement this month, almost 18% in the month. The market could be ready to kind of consolidate at these highs in preparation to go above the highs, but that could take a couple weeks. So just be prepared for that as well. Those are my thoughts on the NASDAQ. If this is where you want to stop the video, that is fine. I'll be moving over to the S&P 500 now. All right, so blowing up the screen on the S&P 500. First, we'll take a look at the credit downgrade area again, because I want to make sure we look at this for all sectors or every instrument that we're looking at. We can see that that information came out August the 1st, 2023. We were consolidating on a nice little uptrend. We again ran the highs, which is the key here. We ran the highs, and then once we got that news, we gapped down after running the highs, ironic or structure based. And then from there, we again sold down about 10%, giving us the lows of the year at October 31st, 2023. I remember this like it was yesterday because I was trick-or-treating with my children and also watching the market go crazy. All right, so from there, that was the low of the year, and then we just have been rallying ever since. So again, you can see that we run these highs, right? But we haven't run these highs. I'm not saying that the market has to run these highs. It officially has ran these highs, so it could start to trade back down and give us the low of the year or the double bottom of the year, right? And then that'll be the last buy of the year, like the big buy, right? Or again, like I said, we can continue to run these highs. So we'll see how it's going to be delivered. But as far as the monthly structure, again, very, very bullish, barely any wick coming off this aggressive drop into these lows from, 2023. This was the retest. If this was the retest, to be honest, like I just don't even see a reason for the market to come back into this wick, to be honest. Like if we're rallying here, we got above these highs, we swept down, this was the buy, right? There's really no reason for the market to come back into this wick whatsoever, to be honest. If we're going to remain bullish, right? Like just no reason for the market to come back down here. So I would anticipate the market running these highs and then using the gap that it creates here as the new level of support. So we'll see what happens there. On the weekly time frame, again, the 200 EMA has been acting as strong support. I said last week that this was an inflection point, a pivot point per se, that the market needed to get above, and it literally got above it before the market even opened. Before you could even trade it, we were already above 58.34. We continued above 58.34, and if you're a bear, you are extremely nervous right now, but your saving grace will be if the market cannot trade above this consolidation. That will be the only saving grace you got. I doubt if that happens, but at the same time, that's the only saving grace you have if you're a bear, is you do not want to see the market take out these highs, because most likely this is where all of the stops that brought this selling pressure, this is where all of the stops are right here. And once they hit those stops, you do not want to be the person shorting at all-time highs. I've learned that from experience. You don't want to be that guy. All right. Looking at the daily time frame, again, like we talked about last week, we're above the 200 EMA. We're clearing above the swing low or the swing high, which means that the uptrend is now the strong favor. It was very much in favor here on the higher low, the gap up, and then the push above the highs just solidified it for me. So essentially what you want to see is the market to keep going and then eventually pull back into these highs or back into this range that brought the aggressive uptrend. again, taking the note that from a news standpoint, if Moody doesn't drop us, right? If Moody doesn't drop us and it keeps pushing or we just balance out, be aware that this is a great time for the last 2 weeks. Remember, we'll have a shortened week next week. There's not a lot of catalysts going into this week. So this would be a very good time for all the people that were getting all this free money with these nice trending days. It'd be a really good time for the market to just chop in a very strong range before taking these highs. So just be aware that we just took a new high, and whenever we take a new high, we usually go into a period of consolidation. So make sure you have that as a potential on your trading next week. All right. Now let's go down to the 4 hour on the S&P. We'll break out the top down analysis. I'll give you my levels on what I anticipate the market doing. Again, these levels are just my predictions based off simple true ranges and math. That's all it really is, right? That's all I'm doing. So we can underperform, we can overperform, but ultimately this is what I'm looking to target if I'm a bull. So if I'm a bull, I want to see the market trade down first. We are so bullish that I would just like to see the market hold the daily fib, right? And then push back up higher, up about another 5.5%, up into 62.51, which again would be an all-time high for the year, which is crazy because just a month ago we were in a bear market. It's crazy how this market's been moving. But if we can't get that and we just gap right up, very, very similar to what we did last week, then I'd be looking for the market to pull off the previous day high and push up 5.02%. The other level that I didn't mark, and I don't know why I didn't mark it to be honest, but coming off the weekly fib, which is very similar to what we did on the NASDAQ, and we'd be looking for about 5% up, right? So we'd be looking for about 61.48. So I'll actually mark that. I'll leave that there, mark it there. So to the bullish side, we're looking for 61.48, 62.51, or 62.77, which again, if we zoom out, would put us right at those all-time highs again, right? Dropping down to the 4 hour once again and explaining my bearish thesis. We're looking at the bearish thesis. We want to see the market trade up. Again, I would still anticipate the market trading above previous day high, letting us know that we still want to trade higher. So if we gap up, I expect maybe a smaller gap, and then for the market to immediately come back and fill that gap to start trading down very, very fast, right? Very fast. If the market comes down from here, it's going to come down very fast. I'm going to emphasize very fast. It will be somewhat of a liquidity sweep because it's only coming down to clear the liquidity and fill these gaps, and then it's going to head right back up. So if that happens, I'll be looking for us to be aggressively down 5.02% to start the week at 56.65, which again makes sense because we got the Moody thing, right? It would definitely fuel those bears to start coming into the market just long enough so the market could trap them down here, okay? From the previous day low, we'd be looking for another 5.5% down to 56.25. So this one would be from the previous day high, basically, or chessboard high. And this one would be from the previous day low. So if by Wednesday, we're right back in this level, it's going to make me extremely bullish on Wednesday, right? Whether it be London, Tokyo, doesn't matter. If we're down here, I'm going to be looking to trade it, period. All right. So those are my thoughts on the S&P 500. We'll break down the Dow Jones. Then I'll walk you through some of the news for the week and what I'm seeing out of the volatility index. And then we'll get you guys out of here. All right. So moving on to the Dow Jones, again, we'll start with the Moody information, right? We go all the way back to where the credit downgrade happened. And you can see it's just literally everybody did the same thing. And it would not surprise me if we do this same thing, right? Just to get back down. So even if we don't clear the liquidity quicker, we just slowly start coming down for the next, 3 months. Because I think this took, if we're looking at the time frame, we started from August and it took us 3 months to get back down here, right? So it wouldn't surprise me if we did the same thing, just filling that liquidity, and we spent the next 3 months in somewhat of a bear market, right? Like it wouldn't even be a bear market, just be a bearish time for the market, right? You can see we just took these highs, or the Dow hasn't taken a high yet, but once we take these highs, usually taking the lows, taking the highs, we come back down and put in that inverse head and shoulders or that double bottom, right? Is what I'm looking for the market to accomplish. So going into this week, I am following the trend, as in we're still bullish. However, I'm anticipating an aggressive pullback at some point out of this market. But until I see the signs for that pullback, I'm going to continue to be a bull, right? Until the market decides, okay, enough, let's take it back down a little bit, because it will come back down. No doubt about it. All right. So looking at the monthly time frame, what do we have on the Dow Jones? Dow is moving a little bit slower back to the upside because, like I've explained in multiple videos, it's more true price action. It's the oldest instrument, right? It's the one that has the least amount of stocks. So if one stock is being aggressively sold off, it's going to cause a problem in the Dow Jones. I talked about it in my last video for the top-down analysis. A 20% drop on the United Healthcare stock is going to bring the Dow Jones down. It brought it down, but the Dow, in true fashion, eventually by the end of the week, I kept screaming it. I was like, if you want to go long the Dow. If you want to go long the Dow. I screamed it, but I didn't even trade it, right? Like, I hate when I do that. But again, sometimes I'm just human, right? And I miss things, right? But on the weekly time frame, we can see we held the 200 EMA. We got above the 200. I mean, we held the 200 EMA, and now we're pushing to get above 43,109. Once we get above here, however, we do have a fair value gap right in this area at 43,519, the week of the 24th, down to about the week of the 10th of March. Not necessarily a wick right there, but I still like the gap nonetheless to see what the market wants to do in that area. For me, I need to see those reactions. I need to see the market completely break structure before I get on board with these shorts in regards to holding them longer term, right? Right now, you can't hold shorts. You can only hold shorts back into structure right now. So until the market breaks structure on a higher time frame, there's no reason to hold these shorts longer than the next fair value area, right? Because the bulls are coming in every single level. All right, on the daily time frame, what is that level? I'm looking for 40,793 to break. Basically, Wednesday, May 7th. If as long as we're trading above Wednesday, May 7th low, right, then I'm bullish, right? I'll start to become bearish if we can break below Thursday, May 15th low, right? That'll be my first sign and say, okay, retest of this. As long as we don't take this high, I'm bearish back down to here, and then we'll see how we react. And if we come up and we fail again, I'm bearish down to here. We'll see how we react, right? Once the market takes this low and fails again, then I'm bearish down to this gap here, right? So we'll see what happens, see how they decide to deliver it. But those are my thoughts on the weekly and daily time frame. Let's come down to the 4-hour time frame, and I'll break down my thoughts and my predictions for this week. Looking at the 4-hour on the Dow Jones, again, take note of this May 11th in wall because this will get filled at some point. Don't know if it's this year, next year, or this week. We'll see what happens, but it will get filled. The monthly fib lines up with the previous day high. That's why you don't see me have a previous day high here. But if I'm a bull, I want to see the market trade down. Because the weekly fib is so close, I want to see the market trade lower into the in wall for May 11th. If we trade into the in wall, we have two things going on here. Obviously, we have the new week opening gap, support and resistance for higher, for the big dogs. But we also have the 200 EMA here on the 4-hour. So if we trade back down here, there's multiple reasons for me to be a bull. I want to see the market hold, put in a reversal pattern. I'm looking for 4.52% back to the upside at 43,636. From the weekly fib, if the market can't get back down to this low and it decides that filling this gap was sufficient enough, we go back into the weekly fib, and then I'm looking for 4.47% back to the upside at 44,092. Unlike the other two instruments, however, that we just went over, the NQ and the S&P, even if we travel the 4.47%, that's not going to be enough to put the Dow Jones in all-time high territory. So like normal, if you were here when everything else was running to all-time highs, the Dow was lagging behind there as well, because again, it's true price action, not as many stocks, not as much manipulation, right? To the downside, right? If we're looking for the market to go down, we want to see it trade up first. We got the chessboard high up here, right? At 42,667. We tap into these highs right here, and then we travel back down 4.43%, closing the gap on the in wall, getting on the other side of the in wall, using it as resistance and pushing into the monthly settlement of 40,767, right? The previous day low could act the same way like I've been talking about, which is we get the gap down for the Moody'S news. The market fills that gap back to the upside, taps back into the previous day low, fails, and then pushes back down 4.45% into 40,442. Obviously, there's another scenario at play, which is we gap up above all of this, and then we just use this daily supply zone as support, and then we will continue to push up, targeting this daily fair value gap. That is not out of my radar. I just didn't put it in my predictions, but now you have it in the video. So if you want to go, look at this level, you're more than welcome to do so. All right. So let's move over to the volatility index and see what we can find to support or deny our thesis. Well, first and foremost, we're looking at the monthly, and we can see, although it's choppy, the VIX did get above these highs, right? And until we break back below the all-time low, which I don't think we'll do, we're just going to continue to range in this area, right? We come down to the weekly time frame. We're currently at the weekly fib, right? And we're sitting inside of March 31st candle. When we get stuff like this, this is a good sign. Us stopping at 50% of this weekly candle right here, it's a good sign that the market may want to continue, or the VIX may want to continue back to the upside. Where we are in the market, it would make sense for the VIX to make another trip back to the upside to retest the consequent encroachment of this candle here on the weekly, right? The VIX can go back up aggressively into the consequent encroachment, even sweeping these highs, right? Giving the market a healthy pullback, but not elevating the VIX to danger zone levels. We can go back up to the 30s, the 38s, the 37s, even to the 40s, right? And then the VIX could just come back simply back to this level, right? And continue its uptrend while the market goes back up and continue its downtrend while the market goes back up and continues its uptrend. So in a sense, what I want to see the market do is I want to see the VIX hold above 1438. Roughly, I really want to see it hold above 16.9, 17, right? If we can hold above those levels, then it's going to start to fuel that bearish thesis and a rally back into the 30s with over the next 3 months, right? Which would be, a few weeks. It'd be like, what is it? I don't know, a lot of weeks, right? But over that time frame, it would make sense for the market to travel back up and retest this. So that's all I'm really trying to say in regards to the VIX. On the daily time frame, the daily supports that thesis as well. We're consolidating at the lows, which could bring us a sweep down, the last final sweep into the low or the high and the low that brought this new high. If that's the case, it would make sense for the market to tap back into the March 11th through March 25th ranges and then start to travel back to the upside, because the uptrend, although it looks bleak, the uptrend is still in effect on the VIX until we get back below 11.3. And I just don't see the VIX doing that, right? I'm a strong believer that they like to keep the VIX on the low side, they like to keep it between 14 and 13. Anytime we start traveling back down to those lower levels, right, 14 and the 13s, you can expect a small spike or a nice aggressive spike out of the VIX. So we got about another 17 points before we get back down to those levels. So if that happens, then you know that the VIX is going to be ready to rally back up. Moving over, last but not least, moving over to the news for the week. And this is what I was saying when I was saying there's not a lot of catalysts in regards to news other than the Moody'S, right? So if you look, Monday, low yellow folder type news, right? Low resistance liquidity runs, you already know what it is, right? On Tuesday, basically nothing, right? There's basically nothing on the docket for Tuesday, right? Like Canada has CPI, but for the US, it's just a bunch of speakers. Mussolinium speaks. I don't even know who that is. But anyway, on Wednesday, again, nothing burger, right? You look at the news, there's just nothing going on in regards to fundamentals. It doesn't mean the market's not going to move. I'm just saying that I've seen this movie before. That third week can be a real rangy type week. So just be aware that the range could be in effect if Moody'S doesn't give us that volatility spike that everybody's anticipating, right? And then we go into Thursday. Obviously, we got unemployment claims. We get a little bit of a jolt there. Also, we have flash manufacturing PMI and flash services PMI. But again, nothing really special going on this week. And remember, this is the week prior to Memorial Day weekend, which means participants could be at the lower phases as we roll into a holiday shortened week. So just have that in the back of your mind. If your setups aren't working or they're not going to target, maybe consider lowering your targets lowering your size, getting prepared for June, because that's what the big money is going to be doing. So hopefully that helps you guys out going into next week. Those are my thoughts. This is the top-down analysis with me, T. Hobbs. Thank you guys so much for tapping into the Trader Shop, and I'll catch you guys on the next one, man. Peace.